Okay, cool. All right, yeah. So as I'm saying, right, stop strategy hopping. A lot of you are probably going from Discord to Discord to Discord. I get it, right? You're looking for someone who's gonna make money every single day. It's not gonna happen. Okay. Sometimes you have to slow it down. Understand that trading is a longer term game, and eventually you're going to make a ton of money if you do it the right way. But if you keep strategy hopping and if you keep looking for the next shiny thing that's going to make money, it's probably not going to happen, because a lot of strategies are going to suck during some markets. A lot of strategies are going to be good during good markets, but we can make money in both. Just understand that sometimes you don't have to press the gas, right? You can look to slow it down a little bit, look to see what works, and then from there you can adjust, right? Like if I'm looking at longs here, right? This is why I never really went full size on anything. If I'm looking at longs here, I need to see price come back, hold, and then move out, right? But that didn't happen, right? We broke under the moving averages. Here we made another higher low, we came down. You can't size up into markets like this, okay? Maybe you can size up into the short if there's follow through, but into the longs, you just can't size up, right? Because then you're sizing up into the highs where you're getting rejections. So you have to understand what the markets are doing and how to trade them as well, right? So for example, we're not getting any new highs on Qs. So why do we think breakouts are going to work? They're kind of not, right? Breakouts are going to be getting stuffed and they're going to be less likely to work out. So what do we do instead? Well, we know that the market has been selling the rips, right? And it's been buying the lows, right? So instead, we look to adjust and shift our strategy a little bit and look more so for shorting the highs, right? Shorting rejections, and then buying into lows if there is bounces, right? So this is where I would look to potentially long. If we get a breakdown and we have a lot of volume and the market changes its character and it doesn't bounce off the lows anymore, then we look to short, right? But like a lot of people are intraday and they're looking to short the lows, looking to buy the highs. Like you're getting trapped into exactly what the market wants you to do because you've been used to like this type of price action, but clearly the price action has shifted and the market structure is shifting as well. And we have to understand what to look for. So I'll be going a little bit more in depth into that as well and what I'll be personally looking for. And also how I've been managing to have some pretty good trades, even though the market has been weaker, right? So even though last week we had weaker markets, I didn't really trade much, but we still had some pretty decent trades. And I just kind of managed my risk pretty well. The only bad trade I had was GameStop, but I managed that one pretty nicely as well, like a 25% loss. So you can still make money longing things with a weaker market. You just have to know where to look for the leading themes, look for the leading sectors. If the market is really lagging and we see things start to really break down and we get a downside trend, that's when I'm going to be looking to take things to the downside. But for now, shorting the highs and buying the lows is working pretty decently, especially into key levels. We'll see if that switches up, but that's something I'm looking at. So in terms of how SPY is setting up, we clearly have this head and shoulders look, right? It was looking a little bit like we were going to squeeze the lows and maybe have like a failed head and shoulders breakout. So that we know is usually something that plays out pretty nicely. But clearly sellers took control again here on Tuesday, and then they followed it through a little bit into Friday at the 100 EMA. But again, now look at how much we are extended off of Tuesday's move, right? We're down 3% without any consolidation going into the lows. So what do we expect? Probably buyers are going to try to hold up. If they don't, and we see fall through to the downside, that is your sign to take a pretty big short position to the downside. Target this gap fill. That's the elections gap. That's probably going to get filled regardless, in my opinion. Even if we hold up, like on the weekly, I think the elections gap should probably be filled. And then we have the 100 EMA, right? So the 100 EMA, if you go back, has been some pretty important support for the market. We had some pretty decent support here for this bounce. Here, when we undercut the 100, we kind of got back above and held. So that's the next EMA to look at. So if we can hold that spot, we can look to bounce back up to 597. And then from there, again, look for weakness off the highs there. So far, it just looks like consolidation. And we just want to see where we're going to break, right? So we have this range of consolidation. If we break the lows, great. We look to short things to the downside. I would target the 200 EMA. I think if the market pulls back and SPY gets under the 100 EMA, I think a 200 EMA test is probably due, right? If you go all the way back to where this uptrend started, so we had obviously the 2022 bear market right here, which was like a choppier, slower downside market move. Then we reclaimed the 200 EMA here. We held the 200 EMA, and then since then we've been uptrending, right? And since we reclaimed the 200 and held the 200. We have not tested it once again, right? So we had a pretty close call right here, but from there we kind of moved back up. And we haven't really had a big test of the 200 EMA. And if you know anything about long-term investing, or if you follow, like, you have looked at anything of like Charlie Munger's strategy, or like Warren Buffett's strategy, they literally just buy the 200 EMA, right? Because the 200 EMA is very, very powerful. This is usually where long-term buying happens mainly. And you can honestly just outperform the S&P by just buying the 200 EMA on strong stocks. So if we do get a pullback there, that's when I would target this short if we were looking to take things to the downside. And then this would be where I would be looking potentially to start looking to take some longs if we do get there, right? So obviously I'll update as we go, but just going into next week, just keep an eye on this level. It's very simple, right? If we break under 579, you're looking at the elections gap for the first TP, that would be 577. And then under 577, obviously you could target this low right here at 568. And then the 200 EMA would be a potential spot to look at. If we hold, then you're looking for a reclaim of 580. So that would be this low right here. If we can reclaim 581, then we can see a move back up to 597. And that would set us up for like a pretty tight kind of flag to form here on the S&P. So we can go either way, right? Like this, if you look at this from a non-biased perspective, this is either a bull flag that's setting up in a wedge to move higher. So we've done that a few times, or it's setting up for a big reversal to the downside and really roll things over. We haven't really had a big rollover since this move here in August. We haven't really had a big rollover since like all the way back here, right, in 2022. So could happen. I'll be watching for the possibilities of that to happen. Just watch the levels. It's going to be very simple. Markets are at a key spot, which is great because that means a lot of opportunities. So the moment we break the key spot, or if we hold the key spot, then you know we have a lot of opportunities to trade against that level. So that's the look there on the S&P. Now, tech still looks pretty bad, but same kind of idea I would say here as the S&P. We are coming into the 100 EMA. And the reason why I'm not 100% super bearish is just the way that things have been trading, right? So again, every new low, we get a kind of like fake wick here to the downside, reclaim, and then move up. And we had the same thing happen on Friday. We haven't had any follow through up yet, but you could see we broke under the low and then reclaimed. Usually for a weaker market, you'd want to see it move in stair steps like this. So price will come back up, right? It'll retest the previous low, and then it'll move against that to make new lows. So you can see that it should look something like this. So move lower, high, lower high here, move lower, and then next low here should be a reject of the previous low and then move lower. But you could see we kind of ended up kind of sweeping that and coming back up. So that usually sets up for like a wedge, right? Because you're making lower lows, but you're getting like really tightened up to move the other way. Now, I'm not saying that necessarily has to happen here. I'm just observing the price action. So we could, again, be setting up in a potential wedge here. So it looks like the selling isn't as like aggressive as something like this, right? So I'm just kind of pointing out the difference. You could see here what ended up happening was we had a huge gap down below this level and then big move down, right? And again, when we did come back up, look what ended up happening. We held the previous low and then moved down, right? So that's usually how bearish markets work. And then when you reclaim a previous low like this, that's actually usually when the trend starts to change, okay? So that's why I'm pointing that out, because we haven't really had that break of low, hold, and then move lower. If we do see that, that will bring some big selling in my opinion, and that will really give me conviction that things are going to move lower. So that's what I'd be paying attention to. So for now, it does seem like a wedge is setting up here. We are under the EMAs, so I am going to be careful, and my risk is still going to be lower in terms of my sizing. But I'm still looking at both directions, right? You probably are asking me why I'm not just looking to short. And the reason why is because even looking at some downside setups, there's really not that many out there that are catching my eye. And like I mentioned with you guys with long setups, you want the market to all really be setting up in the same exact kind of look. So what I mean by that is right now, there's a lot of sectors that are weak. So if you look at like the Dow, for example, super weak. I mean, this is coming off of a big downtrend. If you look at IWM, still pretty weak, right? But the difference is this one's bouncing a little bit here, versus the Dow ended up closing all the way at the lows. So you can see the differentials in like the type of looks in the market. And to me, it's more of a mixed choppy market than a straight up bearish market at the moment. Now, that obviously, again, that could change depending on if the follow through is to the downside. But to me, that's how I'm seeing the setups. Like if I look at a bunch of setups, there's still a ton of names above the moving averages and some even at like new 52-week highs, right? Like even something like Tesla is still not under the 50-day, right? It still looks like it has some relative strength. If you look at something like ARK, this one's still bouncing off the 50. So even though, again, volume patterns are not the most bullish, the markets are not all above the moving averages, I'm still in between. I'm kind of mixed on what I'm seeing until I see some follow through. So I'm ready to play both sides. I don't want to have any bias. I'm open to playing wherever the market wants to go. And that's how you should always come into the market. As long as there's no trend, right? If there's a trend, then you should have a slight bias because we're trying to play the trend. But right now we're just kind of chopping in between the moving averages. We haven't really seen any follow through. And again, yeah, a lot of people are looking at the weekly. If you look at the weekly, we're still in a pretty big weekly uptrend, right? The volume patterns are starting to be a little bit bearish here off the highs, but we are in a big weekly uptrend on a lot of stuff. If we do break, let's say like the 21 EMA on on SPY, then again, there is that room down to like 548. And if you actually look at the 50 EMA on the weekly and the 200 EMA on the daily, they are pretty aligned. So that would be kind of like the next target that I was mentioning for to look at. But yeah, that's the look there. IWM, I'm watching this one early in the week. Reason why, look at where it's at, right? The 200 EMA. So if you guys have been tracking IWM over the past year, every single time it's made a new low, look at where it's bounced. Boom, 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 and then now it's testing the 200 again. So again, that doesn't necessarily mean it has to bounce, but small caps have been beaten down off the highs from 244 over the last few months. We could be getting in oversold conditions here, right? So I'm looking for potentially a bounce here. If we don't bounce and we break under the 200, we could see a ton of downside, kind of something similar like how we saw here in 2021, because this could just be like a double top, right? And this comes back down to the lows, but I'm watching to see how that 200 EMA reacts and what price does there. You're also looking to see if it can reclaim the prior break of the low, right? Because this has been moving really well to the downside. It's been moving very, very clean in terms of the continuation. So I'm watching to see what happens here on IWM. That's a nice look. And the Dow, same thing, but it looks pretty weak to me. So I think the Dow maybe wants to come all the way down to the 200 as well. A lot of setups like CAT, for example, if you guys have been paying attention to industrial stocks, have been looking very bearish. So things are breaking down like this. We could see some continuation to the downside on this stuff. So this would be a good sector potentially to look for the downside, in my opinion. The sector that I'm potentially, there's a few sectors that do look good to the upside as well that I think has been holding up some nice strength. If you look at Bitcoin for starters, it is giving us a little bit of an idea on what's happening with risk on names. It has been holding up decently. So even though Bitcoin has been on the weaker side in terms of this setup here, it has been holding up pretty decently compared to a lot of other stuff, equities as well. So Bitcoin's still holding up. That means some crypto stocks can hold up. But also, like if you look at Tesla, it has kind of like a similar look, right? Like these aren't really pulling back that much. These are more controlled pullbacks to me, right? So like a big sell-off, if you go back and look at how Tesla like pulled off the highs, right? If you look at like the moves that it was making off of this high right here, you can clearly see that there was some distribution. So obviously it's still early, but this would be something that you'd see for like an uncontrolled type of sell-off, right? So this would be a sell-off that's really like out of like fear, out of like a lot of selling. And then for this type of sell-off that I'm looking at here, we could be a little bit more controlled because again, we are seeing that the lows are being bought, right? There is some a little bit more strength. So that's just something I'm noticing. Again, doesn't mean that this doesn't come down if the market does, but it's something to watch, potentially could be setting up. This is a previous breakout level as well. So that's something that I'd be potentially watching. And Bitcoin has been holding up pretty well. Now, looking at the VIX, going to be very, very important. So a lot of you have been sending me DMs saying the VIX has been helping you intraday. Great, right? We want to pay attention to the VIX because it does help us confirm our bias on stuff. If the markets are going to pull back really strongly this week, we're just going to break over 20 on VIX, right? So you can clearly see that $20 has been the spot. We rejected here and we rejected here on Friday. So if we break over 20, just look for a big move on VIX and a big move down on Qs and SPY, right? That would confirm you. So I would just really just set alerts over like 20.32. On a break of that, that confirms more downside. So pay attention to the VIX. That will help you confirm the downside. If we do reject on the VIX and we come back lower, so let's say if we get under like the low from Friday, under 18.78, that will relieve pressure on equities and we can see a bounce on equities. So that could confirm to you that markets are going to be bouncing. So that's something I would watch. Energy stocks have been pretty strong. XLE has already made a pretty decent move off the lows though, and it's testing the 50 EMA here. I'll be paying attention to see maybe there's like a higher low that's going to be formed, and then energy wants to start trending. Could be a nice sector to watch. A lot of energy stocks have held up really well, especially the ones in the theme of like data centers and stuff. A lot of like renewable energy stuff. You guys have seen stuff like VST, like electrical utility stocks, VRT, BE, GEV. These type of names, GEV, look at this chart right here, really nice. So there's a few good setups there in these type of names. And then ARK has been holding up decently as well. As I mentioned, it's at the 50 EMA. So out of all the sectors, the big indexes, QQQ and SPY both under the 50. ARK is still above. So that's something to watch for in terms of like relative strength compared to the other sectors. So pay attention to that. That would be something that we could potentially look for early in the week. And yeah, stuff like Roblox, stuff like Tesla has held up pretty decently, right? Even stuff like Hood, if you look at Robinhood, it has held up pretty decently. So there's still some strength out there in the market. We just need to see a bounce that doesn't get shorted, right? That needs to be a change of character in the market. And then that will allow some of these setups to go. If the market continues to be weaker, then that would be a key, a sign for us to look for things more to the downside. But yeah, that's a pretty quick like overview of what I'm looking at in terms of the indexes and sectors. A few more sectors like in depth that I'm paying attention to. First is gonna be the apparel theme. Okay, so if you look at something like ANF, this has been so strong in terms of the weekly chart. It's been holding up so nice. It has been failing to break out a lot. So what I would recommend to do is look to buy it near the lows if we can. But I think at this point on a breakout of 162, it might just be ready, right? Because it's already had so many tests up here. I think at this point, buyers are already going to start cracking the supply here and get us out of this range. So over 162, I really think it starts to move. Could test up into 170. Another one that looks good is ON. This is another apparel stock. Looks like a break over 57 moves up to $60. Another really strong one. Like look at the weekly on it. Every single time it's formed a tight base, it's gone a really nice move to the upside, right? Tight base here, pretty nice move to the upside. So we could be setting up something kind of similar here for this one. It does have a really nice setup to it. So I'd be watching that one. This is apparel. There's another one that looks good. Lulu to me looks pretty nice. You can see this one was pretty strong. It gapped up here, came back down, but it's holding the 80 MA. Something like Gap looks pretty good. So there's a few sectors that look interesting. Energy stocks, like I mentioned, VST would be one. That looks phenomenal to me. Another one, VRT. This is another one that looks really nice. It's breaking out of this downtrend here. I had a few hammers here off the lows. Could be a really nice one. Something like BE looks pretty good to me as well. Breaking out here, retesting. Could get back over the moving averages. Something like GEV looks really nice as well. So those would be a few themes to pay attention to. And then airline stocks look really good. So I have this one on my focus list. AAL looks really good. Anything like travel as well, like cruises have been pretty nice. If you look at like NCLH, Norwegian, you have a very tight bull flag forming here. So there's a few sectors that still look pretty good for longs. Again, I'm not 100% bearish. I'd say market's more so like 60-40. We are below the moving averages, so you have to lean a little bit more towards downside continuation. But there's so many setups and themes that are holding up pretty nicely that I'd say it's more so a mixed market until we do get a lot of follow through on things. So yeah, the reason why you haven't been seeing follow through that much to the downside is because of how many themes have been strong, right? So when there's a lot of stocks that are still green in the market, it's really hard to drag things down. So only a few stocks are really going to lead lower, and the rest of them are going to hold up because there's still strength in the market. So those would be my long ideas that I think look pretty good in terms of like themes. A few downside ideas that I do like. Stuff like this looks really good to me. So if you look at like PayPal, it was setting up very similarly. So it had like this head and shoulders rounding off here. And then you could see on Friday, it really broke down with lots of volume. Look at Crowd, right? Very similar. We have a left shoulder, head, right shoulder. And it looks like a failed breakout higher here, failed to hold, now came back down, higher low here. Now we're going to make a lower low if we break the 50 EMA. So stuff like this would be probably my favorite short ideas. Things like CAT do look good still. The only thing that I would say is this would be like retest ideas, right? So if this is going to be lower and it's going to form like, I mean, this is clearly a downside trend, but I wouldn't really look to short the lows here just because it's a bit extended already to the downside. So something like this for a retest looks good as well, right? But something kind of fresh that hasn't broken out down yet, something like crowd. So look for things that are setting up on the daily time frame and that are kind of rolling over like this. That would be your idea. And that would be obviously if tech does break down nicely, stuff like this could really roll down to the downside. So that would be something to look at. Something like also I saw Netflix look pretty good as well. So you can see what I'm talking about. It had like a lower high here, sorry. And then it kind of started to roll over and then boom, got under this level and then just kind of nuked that spot. That's kind of what I'm seeing for a lot of names potentially to set up. But yeah, that's how you would kind of look for these type of shorts off the highs that are below the moving averages. And then from there, stuff that's already made a move like this, I wouldn't really look to short the lows. What you would look at is the same thing how we've been looking at for like long setups, right? So you'd look for a bear flag with lower volume into the moving averages and then boom, next leg down. So it's the same exact continuation setup that I teach you guys to the upside. You're just looking for the same thing, just to the downside. It's very simple stuff. Just reverse the chart, right? So that would be some more ideas to the downside. I'm still looking at like NVIDIA for potential downside. It's below the 50 EMA. It is extended off the high here to the downside already. But it does look pretty interesting because it got a big rejection. And if you look at the weekly, I mean, yeah, that's a huge double top, right? So it could be falling through to the downside if semis and tech stuff does continue to move lower. That would be something to watch. A few other ideas that I'm interested in. There have been a few stocks that have been holding up pretty nicely. Roku is one. Snapchat and Meta could be ones to watch with the TikTok stuff going on. I like SMCI. That one held up pretty nicely. RKLB is one for strength. MSCR could go either way depending on where Bitcoin goes, but I like the consolidation on this one. Now, Apple's another big one that you should watch, right? So obviously, Apple's really been leading things to the downside. It had the big move to the upside that it made on the breakout. And then since then, it's kind of been just really selling like pretty hard. So like if you look at the difference between Tesla and Apple, this would be the difference. So what I was talking to you guys with like controlled sell-off and like uncontrolled sell-off, where it's like a lot of panic selling and a big fund's probably selling out of their position, that would be Apple, right? Because it's just making a straight move down. So something like that usually is not a controlled pullback and clearly tells you that that's going to be a leader to the downside if the market continues to move lower. So I would definitely watch Apple, see what it does here. It needs to bounce here around the level that it broke out for like a retest idea. Because you could see it did something similar here, and this was in August. So it made like a huge pullback here, kind of broke below the breakout level, and then it reclaimed, and then it ended up moving up. So could it be doing that? Potentially. If it breaks below, though, and stays below, I say Apple probably leads the market lower. So to me, Apple and Tesla are going to be like the biggest names to watch. Obviously, NVIDIA too. This would really give us a clue on what's going to happen. If NVIDIA and Apple continue to sell, clearly markets want to go lower. If NVIDIA and Apple start to hold up a little bit, we can look for some momentum to the upside. I still like some stuff like Serve. This is robotics. It was pretty strong on Friday. Has some interesting potential. Palantir off the 50 EMA. DocU, NCLH, I already mentioned that. VRT is the energy stock. BROS. So you can see there's still stocks with some pretty decent relative strength. It's just really mixed, right? Stuff like DJT looks pretty interesting. This is going to be pretty big going into like the inauguration of Trump. This is like in like 8 days. So it's coming up. PSTG, this looks pretty good. It's like computer parts. Looks pretty interesting to me. CRDO, this is semis, so it looks pretty interesting as well. Has been holding up pretty nice. Shopify could be a pretty interesting short if it stays under this level here, breaks below. So yeah, again, like I said, the market's pretty mixed. A lot of stuff's hammering, a lot of stuff's at the lows. It's really mixed. So I would say, again, just pay attention to the weakest stocks. These would be the ones to short. Strongest stocks would be the ones to long, right? Keep it very simple. Don't try to be a hero. Just look at the overall trends of the market and then see where we break out of, right? If we break down to the downside, looking to short stuff like Crowd, PayPal, Netflix, those type of names look good to the downside. And we can even take some SPY or QQQ because we do have a lot of tightening on SPY and Qs. So just trading SPY could even be nice on a break under this level here for a big flush downside. That could be something to look at. So yeah, that's some names that I'll be paying attention to. Obviously, continue to watch to see how the markets hold up in certain sectors. Like I said, it's really mixed. So whenever things are mixed, always size lower, right? There's no reason to be full size when things are mixed. you're just missing, like, for starters, you're going to miss really good opportunities when the markets do end up setting up, because you're going to lose. I guarantee most of you are probably going to lose money trying to trade these choppy conditions with full size, right? Maybe some are going to make money, maybe some are going to break even. But if you just lower your size a little bit, be smart about this, okay? I really want everyone to succeed, and that's why I'm so passionate about it. But a lot of people don't end up listening, okay? They want to make money super quick. They don't end up listening, and then they blow up their accounts, and they're comparing themselves to other people on social media and stuff like that. I get it. Like, I get the cycle. It's honestly, it's infuriating to me to watch. But it happens, right? That's how trading is, and that's why only the 10% make it. The 10% will listen and eventually realize, okay, this person has had the experience. They've gone through stuff in trading. They've done it successfully for the past few years. Why have they been able to be successful? Because they have a different mindset about trading than I do. That's the reason. Mindset's a lot of the thing, right? Like, strategies are great. They get you like a repeatable thing to do, and repeatable setups and a plan to have for your trades, and they make it obviously not gambling because it's a process that has to do with mathematics, and you have all the data to back the strategy. But if you don't apply it and you're looking at random setups and then you're saying I'm trading the strategy but it's not working, well, you're actually not, right? You're trading random stuff, and that now you're like, why am I losing money? Because you're trading random stuff that you know you shouldn't be trading, that you wouldn't be taking if you were just sticking to one thing, right? But if you try to get into too many stuff and try to look at different strategies and try to strategy hop and go from 0 DTEs to swings and all that stuff, you're just going to get messed up. So I'm not saying you can't learn different things and have different things in your toolbox, but master one thing that you're the most sure that you can kind of master. And so like that would be whatever fits your personality as a trader, I would say. And then from there, just go and master that one thing. And then once you master it, then you can start adding a few more things to your toolbox and then stuff like that. But yeah, just a little rant there because it kind of makes me sad to see the cycle continue. But I know it happens, but I try my best to get everyone out of it. If you do listen and you end up actually applying the things that I teach, I guarantee you, anyone who's been in the Discord for more than, I would say, 5 to 6 months has made a killing just because their mindset's shifting, right? It has nothing to do with the call outs. It has nothing to do with the alerts. It has nothing to even do with my strategy, right? Because my strategy is literally just based off of the best traders in the world and the best returns that were made by traders. That's what I base it off because it makes sense, right? You're trying to trade what the best traders do. So the strategy is not important as much as the mindset. So if you can apply everything correctly, that's the way to go. So again, I'll answer a few questions at the end here. Let me go over my exact focus list for you guys, show you guys what I'm looking at. In terms of positions, the only thing I'm in, so I'm like literally 90% cash. Actually, no, like literally 95% cash. Only thing I'm in is ASTS. This one is one that's nice on the weekly. This is more of like a dip buy idea, right? So I'm not really looking at a breakout here because I mentioned to you guys, right? Breakouts have not been working the best. You can see, for example, on this stock, every time it tries to move off the highs, kind of gets stuffed. So what I'm looking at for instead is a potential hold off the lows because every time it's held the low, it's made a big move up, right? So you can kind of see the idea on that. So that's some setups I might be looking a little bit more into if the markets do stay like this. So just keep that in mind. All right, so yeah, a few setups that I do like, guys. I went over a few, but what I'll be watching personally, I really like the look of Tesla. I'm not sure if this one's going to move before earnings because it does have earnings in 2 weeks. But if it does reclaim 400, if you look at the hourly time frame, it has been setting up pretty nicely. So on the hourly, it does have this nice wedge here. If it pops over 403, it could be a nice one for like a move back up to 426. I'll be watching that one, see what it does off the 50. Again, it could be a decent idea off the 50. So instead of trying to play it for a breakout, if we notice that a lot of the dip buys have been working, we could look to instead take it into the lows off the 50. And I'll show you guys a strategy that works really well for buying the lows in a second. AAL is another one that looks good. This one, as long as it holds over 18, could continue to move higher. So for me, I'm looking to potentially get in on a retest on this one. Just a super nice setup. And again, a lot of these airline stocks have been working really well. VST could be nice for a breakout. This one has been super, super strong. And if you look at the volume patterns, every single time it moves higher, super strong volume. So I think this one, honestly could be one that moves against the market really well, especially if like a lot of names are on the weaker side. That one could be nice. ON could be a nice one as well, over $57 if you look at the hourly. Clearly that's a pretty big level for it here. It's very similar to ANF, I would say. Every time it kind of gets into these highs, it gets dumped lower. But I think the more it tests these highs, the more it starts to break into this level, and the more it potentially gets enough juice to break through. So I think like ANF, ON, these two could be ready to move higher. Crowd does look good for the downside, in my opinion. I'll look to short it if the market does break down. Qs gets below like 505, SPY under 579. That could be a nice move for crowd. I think PayPal could be a nice short idea for like a retest. So as I was mentioning to you guys, again, I'd be looking at the same continuation models for things to the downside as I was to the upside. So my upside continuation model looks like this: flag, move up, right? So ignition candle with high volume, which would have to look at low volume as price consolidates, and then boom, big volume to the upside again. So you're just looking at the exact same thing, right? So you see big ignition candle to the downside. So we had a lot of volume here, and a big, like really big ADR move to the downside. And then we'd be looking for a retest on low volume into the level, and then boom, move to the downside. So something like PayPal, I'd be looking for continuation to the downside. That could be nice. Again, ANF looks really good. Roblox looks really good. It's held up pretty nicely. I'm watching Nvidia for the downside. I think this one, if it really starts to break under like 134, looks good. The only thing is on stocks like this, again, be careful shorting the lows, right? A lot of people do get trapped shorting the lows. Look for it to set up, right? So if it's going to move lower, it might set up like a bear pennant and then move lower. So instead of looking to short it after it's down like, I don't even know, like, yeah, 12% off the highs without any consolidation, look for some consolidation, right? That would be nice to look at. So yeah, that's a few setups I'm looking at. We'll see how the market follows through. I'll be live trading all week, so I'll be guiding you guys going through the things that I'm watching, all that good stuff. But yeah, other than that, let me just do a quick little demonstration on what I would be looking at for longs and shorts in this choppier market, so you guys can get kind of a better idea. So this thing, this concept is called an RDR. So a lot of you have probably heard it already. It's really simple. It's just a previous day's sweep, right? So you sweep the previous day's low, and then you reclaim, and then you move the other way. So what I mean by that is it sets up for a very nice tactical low to trade, right? So a nice reversal. And you can look for the same thing on both directions. So you'll notice a lot of times where the reversals happen is off of these sweeps. Because what ends up happening is a lot of traders will get trapped trying to, like say, for example, this moves lower here, they miss the original long right here, and then up here, they're eager to long, but it's already moved so much off the lows that they end up getting trapped, and then market will reverse it the other way. And then same thing here, market has already moved so much to the downside, a lot of the late shorts get trapped, and then it moves the other way. So it's a good way to kind of time these bottoms and tops when the market is choppier, right? And it's kind of moving in range. And it's happened a few times here on just QQQ. So I'll go over that and then a few other setups. But look at this low that was made right here, right? So after this big pullback, right? The market is already down so much after one day that, again, a lot of these late shorts here are going to get trapped. So you want to mark out the previous day's low. So you could see right here would be the previous day's low. If I go on the smaller time frames, you could see that what ended up happening was the market gap down below the previous day's low right here, and then it reclaimed. Okay, so what happens when the reclaim happens? All these late shorts here are now trapped. Okay, so they either have to get out of their position, which leads to more buying pressure, or they stay underwater, right? And then they hold, and then that leads to even more buying pressure here when they actually end up having to cover, right? Especially if like they're short with margin. So that would be something to look at for like a reversal. So what you do is you would enter long at the reclaim of the retest, stop at low of day, and then you're looking to target either the previous day's high or wherever makes sense to you, right? So just some previous price levels up here. And you can see this ended up working really nicely for this upside move right here. We ended up coming all the way up to 531. So instead of buying up here, you would have bought the low, right? Or not like the low. You're not really looking, you can't ever really time the low, right? I mean, that's going to be almost impossible. If you're trying to catch falling knives, that's the dumbest thing to do, right? What you can do is instead look for something like this to set up. So you basically did catch the low, right? I mean, you have a level to risk now. So you have a lot of probability because you have risk management and you have a reclaim of the previous day's low, which you usually know does squeeze well the other way. So that would be a great idea to potentially get long on stuff. And you'll see a lot of this stuff does set up intraday. Going back to the daily, it didn't happen here for the move to the downside, but it happened here during the day for a nice like long intraday, right? So right here was the low. If I go to the 15-minute time frame, you could see it ended up, let me take that off. I think this was the low right here. Yeah. Of the previous day. So if you go down to the 15-minute here, you could see that we had like the sweep of the low right here in the morning, then reclaimed and ended up giving you a nice move. So you could have got long here, set the stop right there, and then caught this interesting move, right? So again, I'm not saying it's going to be like a strategy that's always going to catch you a bottom for a huge move to the upside. Sometimes it will kind of fade out a little bit, but it is a tactical way to find these lows. And all you're looking for is just a sweep of the low, right? That's kind of giving you that entry. And the whole point of this is like you're not trying to guess if this is going to be the bottom because you don't know what's going to happen here. It could just move lower. But if you have a system in place to potentially catch bottoms or catch tops that are tactical, that sets you up for a really well risk managed trade, which is all that matters, right? A lot of time, like the only big difference between profitable traders and unprofitable traders is that they manage risk, right? Profitable traders manage risk. So they know where they should be managing their risk and which levels make sense. Now, obviously the best traders have levels that make more sense than others, and that's why their probabilities are better. So it all comes down to risk management and probabilities combining, okay? So the math needs to make sense in terms of your probabilities, your risk to reward, and your win rate. And then the risk management needs to make sense in terms of you can't be losing, let's say like 80% of the whole value of your trade and then only winning like when you're taking winners like 20%, right, of profits, because you literally have to win 100% of the time for that to work out, or like literally 90% of the time, or even maybe more. I don't even know what the math looks like on that. So it has to make sense, right? So managing your risk is super important, and that's why looking for something like this sets you up for a well risk managed trade. So let's say the next day price will let me get out of this. Price will, let's say, break the low of the previous day's low, and then it will reclaim. It sets you up for a very good high like risk reward trade because you know you're risking the low, right? You enter here on the reclaim, and then you're targeting either the high or wherever makes sense for you. So this already sets up for you have this much of a loss and you have this much of a win. So you could see the differentials in the risk reward, and it's a very high probability look. So that's why I'm giving you guys some ideas for these strategies. It's a strategy that I implement a lot as well in like my trading. It's not a continuation. It's more so a dip buy into big levels, right? So if you combine this with key levels, like let's say if we have the 50 EMA right here, beautiful, right? And if we combine it with even like, let's say the 100 EMA on tech or the 100 EMA on SPY, even better. So if we combine it with big levels, amazing, right? That's kind of what we're looking for. So that's kind of a strategy that I implement myself, especially in choppier markets. It keeps you from kind of getting trapped at the highs and then trapped at the lows trying to short, right? Because right now, that's kind of what is happening. So you're kind of seeing that that's kind of the trend. So yeah, that would be an idea to look at. Something like this on Tesla would also be something that I would give you guys an example of. So you could see, for example, right here, this was the previous day's low. It broke under in the morning, reclaimed, and then since then you could have got the entry here, stop at low of day, targeted previous day's high, right? Obviously the RR on this one specifically wasn't that great because the low day was pretty low, but maybe you can target up into here or up into here, right? But it did set up for a pretty nice trade, so you would be in like the green right now. So that's like an idea of how you could set things up like that using this strategy. It's very simple. I made a whole write-up on it if you're in the Discord, so you guys can check that out. But yeah, that's pretty much going to recap it in terms of how I'm looking at things, what my strategy would be like for the week. Does anyone have any questions, any chart requests? I'll be getting through everything that you guys are looking at. Let me know. Do you think money is going out of tech and moving to another sector? Well, actually, I would say no, because if you look at the Dow, usually defensive stocks are going to be getting the most money when tech is weak, right? So what sectors are we moving our money to? I mean, other than energy, industrials have been weaker, which is usually pretty like pretty uncommon, because usually what happens is I did this in my like themes and sector video that we went over the mastermind last week. When tech is weak, right? A lot of the funds go into like the Dow, into like safer names, so like defensive stocks, consumer staples, banks, healthcare, stuff like that. So what I'm seeing right now is actually just a lot of outflow in the markets, but some other sectors are holding up like pretty decently. So there are a few themes that look good. I would say ARK maybe is holding up the best, but yeah, it's very, very mixed. So there's no like clear indication of where the flows are. GS looks like ass. Let's see. Yeah, banks did break down really nicely. If you look at that XLF, I was actually talking about this short on Wednesday in the live. Beautiful short, right? So you can see high volume. So if you guys want to study short setups, this would be like the best short setup to study, right? So you could see the first initial move downside was on high volume, low volume as we were moving up, and then again, high volume here to the downside. So this would just be a beautiful short setup. So we could look for continuation and stuff like GS, stuff like that. Is VIX inversely correlated to the market? In a sense, yes, but not directly. It's not like a, it's not like a, I think TQQ is the, no, this would be leverage ETF. I think SQQ is like the, yeah, short. Yeah, so if you're looking for like a directly correlated ETF, it would be like SQQ, right? This would be an ETF that's like directly inverse. But VIX isn't like inverse SPY. What it is it shows you the volatility in the market. And usually like VIX gets bought up when there's greed and there's fear in the market, right? Mainly fear in the market, right? Like when things are really popping off and a lot of people are fearful and there's big moves down, usually VIX gets bought up. It shows you the volatility in the market. So the lower the VIX is and the more stable it is, usually the less volatility we have and the like cleaner price action. The more elevated the VIX is, usually the more jumpy the market is. So if you guys have noticed, a lot of the market has been really jumpy, right? Like the moves intraday have been really nice in terms of like if you're a scalper, we have been having some really good moves both ways. So, I mean, these are really, really big moves. Like we moved 504 to 509 in like 5 minutes, not 5 minutes, but like an hour, right? So that's a pretty big move. And then we moved all the way back down within the same amount of time frame. And then we moved all the way back up again and then back down, right? So just very, very big volatility. And that usually happens when the VIX is elevated. So the market's more jumpy. And a lot of the times you'll see like headlines come out and there'll be a lot of jumpy moves. So for example, on Friday, we had some data that came out at 10 and that led to a very big move to the downside. So market's very, very like reactive when the VIX is higher. CEG, that one had a pretty crazy day, which is why I'm pretty bullish on stuff like VRT and VST. I think those two could kind of follow CEG. But yeah, super nice move. It's above the highs here at 289. As long as it holds like 288, it could set up for a move higher, I would say. Yes, we will have a recording of this. AAL, we went over that one, looks fantastic. Google for breakout or breakdown. Yeah, it could go either way. What I would watch is just it's in a base, right? So I would say over 201 would need to break for a move up, under 185 for a move down. SoFi short. Yes, that one doesn't look too bad actually for a short. A lot of these fintech names have been pretty shortable. They've been pretty weak. Under the 13.7 level, it could move lower. Just be aware of earnings coming up soon. CRNC. Yes, this one is not the worst looking. It was coming off the news, I'm assuming, and then it pulled back here into the ADMA. So it could set up for a move higher. You have low volume here as it pulls in. Could be pretty nice. It needs to get back over $16 and volume needs to kind of come back in here. DEC, this one actually looks really good. It's held up really nicely. I would say to confirm it needs over like 212. Square, this one is pretty weak. So like I said with fintech stocks, it looked like we were going to set up for higher on stuff like this. Like SQ looked like it was going to break out really. But it kind of got stuffed, moved the other way last week. Now it looks like it's under this 86 level. If it stays under 86, probably going to continue to move lower. It needs to reclaim that spot on the weekly. or else we have some weaker price action. You can see the monthly doesn't look the best here as it's kind of rejecting there. So it needs to reclaim that spot, or if it doesn't and it continues to move lower under 81, it could come back down to like 74. Thoughts on Snow? Out of all the software stocks, it actually doesn't look the worst. Actually looks the best, I would say. It's been holding up pretty nicely at the 50 EMA. Weekly still looks pretty good. The weekly actually looks really good. Right at the 80 EMA, it's kind of like setting up like this for a move higher. I would say if the market turns, this one could be a nice one to long. Over like 167 could confirm. What time of day do you like to buy contracts? Usually off the morning or at the end of the day. SOUN needed to hold this 18 level. That's like the breakout spot on the weekly. So if you look at the weekly time frame, it does look like it's a failed breakdown. But it's off the 50 EMA, and the volume has been pretty low on the pullback. So if buyers do come back in, that could be a spot to look for to buy it off the 50 EMA. So look for potentially a nice level to look at. RCAP. This one looks a little bit worse in my opinion, because it had a pretty big like round off the highs here with a failed breakout. And it's back under like 12.3. A lot of these stocks have been running that are like quantum, drones, stuff like that, like robotics, have been selling off. That could be good for the markets, right? Reason why is because a lot of these stocks were like super overhyped and super overvalued. If we get like a reset in the valuations on a lot of stuff, it could set up for some of the bigger winners to emerge in terms of like the best names. But yeah, reason why some of these are probably coming down now is the fact that interest rates are probably not going to come down as much as we thought they were going to in 2025. So a lot of the trade in like late 2024 was like interest rates coming down in 2025. So a lot of like the growth stocks, small caps are probably going to move nicely. But with a lot of the economic data coming out the way it has been, we've been seeing some pretty good like job data. And a lot of the data has been indicating that there's no reason to cut rates as much as we anticipated for rates to be cut in 2025. So if rates do hold a little bit stronger than we expected, maybe like 2 rate cuts instead of 4, that will put on a lot of pressure on equities. And especially since a lot of, again, the trade was like the SPY QQQ moving up. But again, I think a lot of people are not factoring the fact that we are getting a new administration in 8 days. So the Trump markets, if you backtested 2016, 2020, were very jumpy. So it's kind of a little bit of what we're seeing now in terms of like headlines and stuff. There were a lot of headlines overnight. So that's something I would kind of preface. A lot of headlines overnight, but overall, there was strong action, and especially in like some pretty good themes. A lot of people thought like China and solar was going to underperform, but those two themes ended up working pretty nicely. So I think once we get into like the inauguration on the 20th, I think markets actually closed on the 20th for MLK Day, if I'm not mistaken. But I think the 21st, we'll see a little bit of different flows. And then from there, we can kind of get a better idea on stuff, I would say. Microsoft, that one has been very weak. It looks like on the weekly, it's still trying to maybe get this like head and shoulders look. If it breaks under the 50 EMA on the weekly, it's going to be really in big trouble. Probably a big bear flag here on the weekly. It could be a nice short. LLY, that one actually has been pretty strong. On the daily, it does look like it's setting up for a move higher. If it breaks over this 50 EMA, it could move back up to like 812, 843. HIMS, this one has been holding up pretty decently at 25. It just hasn't been able to get like any momentum. I still like the setup here. Just needs market to turn, right? Because every time market's weak, it just kind of gets stuffed. But it definitely needs to hold this 25 level. If it doesn't hold 25 and comes back into range, it's going to be a lot weaker here. Visa for a potential short. Yes, this one could be nice. It does look like a lot of distribution off the highs. If it breaks under 29, I'm on the wrong Visa, but I think it looks the same on the NAS NYSE. Yeah, it looks the same. So like break under 306 here, we could get a move into this gap fill at 302. So that looks pretty good to the downside. BA, this one's actually pretty strong. I would say out of all the Out of all the industrial stocks, this one's actually probably one of the best ones. It had a really good move off the lows, and then now it's setting up. So if markets do turn, that could be a nice one to look at. RDR write-up is in the resources, yes. Let me link it to you guys 1 second. But yeah, there's a lot of write-ups and stuff that are in resources. So make sure you guys check all those out. Especially right now would be probably the best time to like really start getting everything down and learning a lot of stuff. I linked the video. Costco. That one doesn't actually look too bad. It has been pulling back on pretty low volume off the highs, and here you can see some pretty good volume. Actually, retail stocks were pretty strong. So if you look at Walmart, Target, those held up pretty nicely on Friday. It needs to just get through the moving averages, and from there, maybe it could start to trend back up. That would be a big spot for it, though, at like 945. So it needs to get through that level. Do you ever use flow and swinging? Usually not that much, but I do pay attention to like AP flow sometimes, see what he's looking at. And then if it backs my trade, gives me a little bit more conviction. Fubo could be nice for a setup higher. I did have that merger with Disney, so it could be nice. On the hourly, you can see it's pulling back with like lower volume, so it does look like it could set up for higher if it gets through like 5.97. BlackBerry also looks pretty nice. These two are pretty like interesting, like smaller cap stocks. If it moves through like 4.13, it does look nice for a move higher. EXEL. This one is very strong. It broke out over this trend line here on Friday. Looks like pharmaceuticals. Pharmaceutical names actually have been pretty strong recently. Wow, look at this weekly. Yeah, super nice stock. Look at the weekly. It's breaking out of a big weekly base. On the daily, it's been holding up beautifully. Very strong compared to the market. Looks really good, actually. If it gets back through like 36, it probably is going to move and make new highs. What is a gap fill? A gap is basically a move overnight where price like opens above the previous day's closing price, right? So for example, right here at $28 was the closing price of this stock right here, but it ended up opening at $31, right? So wherever the price action right here that wasn't made during the cash markets and that was made overnight is called a gap, because you could see there's clearly a gap right here, right? So between this and this, there's a gap. So yes, the stock did trade at these levels, but it happened post-market, right? So what that means is there's not a lot of orders left over at the spot because post-market is usually lower volume. Even on earnings and news and stuff, post-market is always going to be low volume. So what that means is a lot of the time, gaps will be used as kind of magnets, right? So if we do get a breakdown, let's say on this stock, it'll magnet down to the gap, and then buyers will really need to hold that gap. If they hold the gap, there's a good chance it moves in the direction of the trend and the opposite way. If it gets in the gap, it's probably going to fill the gap though. So that's how you can think of a gap. Who is Eva and Ryan? Those are just two other analysts. I've been working with them for a while. Pretty good. Ryan does just SPX stuff. So he just trades like scalps. And then Eva does a lot of swings, but she's very versatile. And the bot is just how they announce their alerts. So it's like it's not like a bot that's making the alert. It's just how they announce it. So like they attach like a Discord bot to it. But it's real people. SMTC, yeah, this is a good one. I think Yusuf and me were talking about this one. If it breaks over 68.5, it does look like it's ready for a move over 70. ISRG, that's another pharmaceutical name that I was looking at that looks good. I think it's also a robotics name, so it could have a little bit of a theme. Yeah, over 550 does look good up to like 555. UI, that one's another strong one. Yeah, these are really good setups, bro. Over 365, it could run really nicely. What do you think about AEHR? No, you don't trade earnings, but what do you think about that chart? Overall chart looks really good on the weekly time frame. It could be seeing a lot of resistance. Well, it is seeing a lot of resistance here around this like big 18 level. But if it gets through like 18.5, it could run all the way up to 20. MU looks good. Yeah, I agree. Looks good. When you swing SPY or QQQ, how far expressions do you take? Usually like 1 to 2 weeks out. But if I'm looking at like a longer term swing, I'll still take a month out. Do you ever enter and exit a trade after hours overnight? Usually not. If I'm trading like shares, maybe sometimes if I get like stopped out, but usually not after hours. Does positive crossover in EMAs bring buyers? For example, look at MU chart. Yes. So positive crossover would mean an active sequence, right? So that usually means a change of trend, and yeah, that will bring up buyers. So like the 8 crossing the 21 usually is what you look for, but you want the 8 to be back above the 50 EMA as well. So you want the 8 to cross over the 50. Yeah, it's a pretty headline driven market. What are the 4 indicators you use? I mean, I really only use 2 of them in terms of like indicators, would just be the moving averages, so 821.50, and then just volume, which would be just this. But the other 2 I don't really use much. The volume by price is like something I kind of scroll on and off on just to see if there's any like key levels, but usually I already kind of visualize that in my head. And then the 200 and the 100 EMAs I usually only add when we're below the 50 and the 200. Palantir needs to hold the 50 EMA here, but it could be an interesting dip buy opportunity. You could see it hasn't really sold off with much volume, right? So a lot of stocks aren't selling off with too much volume, which is why it's, again, giving me kind of an idea that it's more of a controlled sell-off right now. If we do see a lot of volume on sells, that would make me a little bit more weary. But yeah, the volume hasn't been too high. Looking to see maybe it holds a 50-day. Could be interesting. TSM still looks pretty good. It does have earnings coming up, I think, on Thursday, yeah. So it would be something to look at going into earnings. Also, remember, guys, we do have CPI and PPI this week, data. So that's going to be absolutely like huge. So be very careful going into data. And then also we have OPEX week. So going to be pretty volatile. CVS could be potentially starting to reverse here off the lows. It was a pretty big spot right here on the weekly at $43, so it could be reversing, maybe move back up to 53 potential for it. SN looks pretty good. Break over this 106 spot and hold. I could fill the gap all the way up to 110. SFM looks like it needs to consolidate more to me. It did break out of this downtrend here, but it needs to put in like a higher low and then move higher. Maybe like a flag or something could be built, but not enough tightness to really see anything too much on it. NBIS, this looks pretty decent. It's coming off of these lows here, broke out on the daily, holding here at 25. It needs to get back through like 34, and then it can move up to like 39. Hey Sean, can you show an example of taking a position at the end of the day? I'm assuming based on daily candles close. Yeah, so let's look at something like Tesla, right? So Tesla would be a good example, like here. So you can see the stock was setting up a big base, and it was having a hard time closing over this level on the daily, right? Every single time it touched, it kind of moved lower. So the moment you get a daily close above right here, I would take entry right there based on the daily chart, and then set stop loss at the day's low of day. And then you're looking for this big move up. So usually for the daily closes, you're just looking for a level that the price that stock hasn't been able to break over on the daily time frame. So let me show you another example. I can scroll through a bunch of different stuff. Okay, so let's say, for example, even on like something like QQQ to the downside, right? You could see right here, we haven't been able to close under this level here on Qs, right? So here we had a bounce, here we had a bounce. This is kind of like the first close under this level. So this would be something you could potentially look to take for a downside swing. So that's how you would kind of like identify these type of ideas. See if there's anything else. Oh, okay, again, something like AAL, right? Another perfect example. So rejected here, no daily closes above. First daily close above the level at the highs, you could take it, stop below a day. That's gonna set up your swing trade. So It's not going to be the best, most practical entries, but if you take like 3 to 4 months or even 6 month out contracts doing the strategy, you'll be totally fine. Because most of the time these will follow through just based off the daily close. But I would go back and back test it and see how it looks. Bros looks really good. Looks like it's setting up for a big move higher over 57.4. One of the stronger names. CVX. It got back above the 50 EMA. It's probably one of the stronger like oil names. If it could stay over 50, it could move up at 162, but it does need to tighten up a little bit more to me. RDR stands for Red Dog Reversal. How am I buying contracts at the end of the day? So that would refer to just buying it like before the close, right? So like about 10 minutes before the close, you can kind of see how the daily candle is already going to close. Unless like a crazy move happens at the end of the day, you already know how it's going to close out. Lulu looks pretty good. If it can hold 387, it's probably going to move back up to 414. Roblox also looks really nice. It's holding up pretty well here at $61. It looks like it's moving potentially back up to 63. I was long this one. Got a nice trim on it here at the highs, but we could potentially look to retake it. It's been holding up really strong. Does the weekly sequence on ASTS actually look like a potential short here? The chart has me feeling like I want to tighten my stop and look to reverse my position on a break under 21.60. It could, but I mean, if you really look at it, I mean, it's not even below the 50 EMA on the weekly, right? And if you look at the volume, to me, this still looks amazing to the upside on a weekly basis, right? So I think we have enough time, but if it closes under, let's say like 21.5, that would be the first weekly close under, right? So that would really confirm you that it's going to move lower. So I would look for more so for that instead of just a break of the level. Look for the weekly close, see what it does. Can I make a video on my exact TradingView setup? Yeah, sure. What indicators I use? Just the moving averages, 821 EMAs, and then volume. Did I already share my opinion on Apple? Looks bullish. It looks like it could potentially be bullish only if it holds this level though. It really needs to hold this retest, but it's retesting a very important spot. And again, if you look at the weekly on Apple, last time it retested the breakout, it did move back up. So we could be looking at something similar on that. Just remember, patterns continue to repeat themselves. A lot of people were bearish on Apple here and then ended up moving all the way back to the highs, right? So a lot of people are bearish on Apple here, but it could end up moving all the way up to the high. So just remember, there is that psychological part in trading. You are retesting a very key spot. So I would be more bullish than bearish looking at that. How do we not get trapped by the RDR method? For example, like EXEL chart, if it closes over those highs, how do we not get trapped, if that makes sense? What are you talking? Are you talking about something like this? Like this move right here? You need to be a little bit more specific in terms of like what you're looking at for this. But here you would have just needed to wait for the daily close, right? Sometimes you just end up getting trapped though. Like if you're looking at a setup, breakouts, you're gonna get trapped a lot, right? I mean, that's the name of the game with breakouts. But that's why I always urge you guys to have such tight stops and not hold through, right? So failed breakouts are gonna happen a lot. Just have tight stops. If the stock doesn't hold low of day, so here for example, if you would have taken this breakout, if it didn't hold low of day, look what ends up happening, right? It just ends up coming back down and then ends up running all the way back down. So you don't want to be long that. If it holds low of day, it could potentially move back up. So you have a chance to stay long. But that's why it's always good to have tight stops. And then if you really want to confirm things, wait for the daily setup to close. That's why it would be a really good like entry criteria at the end of the day. Because here you could see that the daily actually ended up closing below the previous day's high. So this was clearly an RDR to the downside. So that's what I would look for. AVGO for a short. I don't know if it would be my favorite because this one really hasn't. It's been moving very controlled to the downside. Like it's not really pushing like back that much, and volume has been pretty low, and it's coming into a big spot here at 221. But if it does get, let's say in the gap fill, I would say yes. So like if it starts to really round off and distribute and then break down, I would say yeah. But at this point, I think it might be a bit too early and into like a bit of a important spot there. GME still looks pretty good in my opinion. It's been holding up nicely. Can you share the theme industry names and tickers in your watch list? Yeah. Like this watch list here, you mean? Let's do CRDO. That one looks really nice. Looks like it's setting up pretty well. Target. This one could continue to fill the gap. It held up really nicely on Friday. It has a gap to fill all the way up to 154. So if retail stocks stay strong, that one looks nice. Walmart, same thing. It could stay strong here. It looks really good. Some good volume patterns. It broke over this level here at 92. It looks like it has some room up to like 94. Looks pretty good. Thoughts on Meta? Meta's going to have a lot of news ongoing here, so I'd be a bit careful trading it. But if it holds the 50 EMA, it's probably going to stay bullish. It's still got a really nice base here. If it can break over these highs at 632, I think it can really start running. But just watch to see what ends up happening with like the TikTok stuff. Hey, Sean. Much like you do during shorts where you take the next week EXP since not playing a whole longer, do you think it would be wise to take half size with next week EXP calls and day trade? Yeah, you could do that. You could do that. Yeah, because things are faster, you know. But yeah, I would take smaller size for sure because you're taking on more risk. I've seen Docu. Yeah, Docu looks really good. Starbucks. I don't really see too much of a setup here. Maybe a little bit of a bear flag to me. Looks like it's retesting into the moving averages after breaking down. So it could be just trending lower. Do you mark it at the end of the candle or wick of it? I think you're assuming to RDR, you would mark the wick. Energy and oil have been strongest sector lately on Finviz. Yeah, energy has been strong. What do you look for when deciding on a strike price and expiration? Greeks? Mainly OI and then delta, yes. So the delta needs to be pretty high, higher than the theta usually. And then for like your IV, you don't want it to be too high. What expiration date would you choose for AAL long call? Probably as long as it doesn't have earnings. Let me just confirm. Okay, so it does have earnings on Thursday 23rd. So I would probably get like weeklies or next week's expiration. Just keep in mind that it does have earnings coming up. So the expiration is going to be a bit trickier to trade. QQQ looks bullish. I wouldn't say it looks bullish. I would say it's kind of mixed, but more so leaning bearish just because it's below the moving averages. But it could be setting up a bullish pattern. We just have to wait and see. Right now, you can't really tell much on this. Airbnb, please. Yeah, so Airbnb looks pretty bad to me. It does have a pretty big setup, like a big base, but it looks like it might be breaking down. Yeah, Starbucks does look like a good short to me. I feel like I got a great entry on GEV on Friday, retest the breakout level, but kind of having buyer's remorse because of market weakness and lots of data this week. Your thoughts on flattening out or adding an SPX hedge into CPI? Yeah, you should. I mean, depends on how much positions you are in long, right? If you're like 20% of your account in longs, I would definitely hedge. If you only have like 2 positions on, hedging is honestly pretty like pointless. I would just wait to see what ends up happening. That way you can react. But if you do have a lot of positions, hedging makes sense, right? So it's only depending on how many positions you have long. But if you're not in a bunch of stuff long, it's better opportunity cost just to see what ends up happening with CPI and then just reacting on that. Can I explain why you took GME and why it lost? Yeah, I'll give a little breakdown on it. So what I was looking at for this was this daily wedge that I was setting up here and this kind of breakout here. I knew that this one was a little bit choppier. It hasn't been able to really get anything going. So you could see it has been trending to the upside, but it hasn't really been following through. But what I was looking at for this was this breakout here on I think this was Monday going into Tuesday. It looked very strong on Tuesday. So if you look here, it broke the previous day's high right here. And then it kind of ended up running all the way up into this 34.4 level. Looked like it was starting to get some momentum and it wanted to break over this level, but it rejected here at the highs. So pretty much reason why looks like it failed is just because it rejected the high, right? So ideally we would have wanted it to close over this level, stay above and hold. Wasn't able to do that, so it ended up pulling back. Still though, like you could see the pullbacks have been on such low volume. So maybe just taking a little bit more time on it would have been a bit better, or just taking it maybe closer to the lows instead of the highs. but I think GME does end up running. So shares, options could be nice here. It's just been tightening for so long. I think it ends up running soon. High resolution on chart review? What do you mean? Chewy? Chewy looks pretty good actually. It's been holding up really nicely. It had some pretty big volume here on the sell-off, but it didn't move too much. Not now at the 8 day, so it could be holding up pretty nicely. NBIS, we went over that one. It looks good. You think BA is the best airline setup? No, I think AAL still looks better. Let's see ALK. I think that one looks good too. ALK, DAL, UAL, those look good. Can you teach a class on selling puts? What delta to choose? Honestly, I don't really sell puts that much, so I don't know if I'd be the right person to teach that. But I know someone in the Discord that does. One of the analysts, his name is Will. So if you guys are interested in that, we could definitely do a class on that because he's a lot better than me at selling calls and puts and stuff. I'm myself gonna look to get kind of a little bit more into that stuff. I do have a lot of shares to cover myself with stuff, so I can start looking to sell premium. Could be nice. Thank you for that. As of now, I'd be net long about 4 names positions or 3.5% of my account each. Can you tell me how you structure a hedge in the insurance instances when it's appropriate? Yeah, so usually a hedge you'd want to do like 25% of your exposure. So if you're like long 20% of your account, 3.5 times, yeah, you're like long like about 17% of your account. You'd want to probably do about like 20%, 25%. So you can like take like 3% of your account in a hedge. That's usually how I like to structure it. And then from there, just see how the market follows through. Amazon, this one actually doesn't look the worst. It is a little bit on the weaker side, but it still looks like it's setting up in a flag, right? I mean, it's not the cleanest action. It has been very wild and choppy, but again, the selling doesn't look very controlled, right? It looks like, sorry, the selling does look very controlled. It doesn't look like there's a lot of fear here, right? It doesn't look like an uncontrolled like fear capitulation type of move. However, that could change, so we'll see what ends up happening. It needs to stay over 218 to be strong, but it does look like it wants to hold up. Yeah, I would usually do like next week's out for the hedges. I wouldn't do weeklies because those are just gonna go to 0. I don't like my hedges to go to 0. Oxy, this one needs to get through this 52 level. That's a very strong spot here. It could be rejecting here for now at that level. All right, guys, last one. I'm gonna do Rivian here, and then probably gonna hop off for the night. Looks like this one is trying to break out of this trend line here on the weekly, but it kind of got stuffed back down. Now it needs to hold these moving averages here, but it has been pulling back on low volume. Just hasn't been really able to get much on it. Fading Netflix, you mean like you're looking to short it? ANF, this one looks great if it gets through like 164. I think it's finally ready. All right, everybody, that's gonna wrap it up for the night. If you missed any of the session, look out for the recording to be